The market seems to have really shied away from fintech stocks recently, but I think that presents a nice buying opportunity for investors who are willing to think long term about what this business is going to look like. I think fintech is a classic aggregation business where if you have consumers actually choosing you day after day to be the financial technology platform that they're using, then that puts you in a really powerful position. You can disaggregate or disintermediate some of the other pieces in the finance value chain. So credit cards for a very long time have been basically the most powerful piece of the value chain. Now we're starting to see more financial transactions from point to point that don't require a credit card, especially within ecosystems. Some companies are now testing blockchain technology, which could dramatically lower the cost to move money from point A to point B. So the point of value, I think, is going to be the company that's interacting with consumers or interacting with businesses, because they're going to control how money gets from point A to point B. I think that's how the power is going to shift from kind of this middle layer, the rails of financial institutions, to actually the customer or business touch point. That's what we see with a lot of technology companies, with a lot of internet companies, and I think that's coming to fintech as well. So I want to highlight 3 companies today that I think are really well positioned for the future of fintech. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. The first one to go over is Block, or Square as they should be called. And I wanted to just highlight a few things about the business, because this business has become much more complicated in recent years as things like Bitcoin have actually made the financials a little bit more difficult to read. The way that Block transacts Bitcoin, they're actually generating revenue every time they sell Bitcoin because they actually hold it on their balance sheet. They're not just an intermediary. So you have to kind of pull that out of the business because that's actually a very, very low margin business. But if you look at the transaction business, this is going to be the Square business, and this is a steady growing business, 36% compound annual growth rate since 2012. So just a phenomenal growth rate for a company that's still this size. They continue to be one of the best point of sale solutions for a lot of businesses around the world. And it's not just the transactions that's ultimately going to add value for Block. Now, that is a point of value because that's where you see that PowerPoint where can they disintermediate some of these other companies who are taking value from each of those transactions. When Block takes a 2.9% or so fee for each transaction for a merchant, they actually have to pay most of that to the interchange or the credit card companies and banks who are involved in moving that money around. So that's where most of that margin goes. But could they actually use different rails? They at least have the opportunity to make those options available to their merchants, potentially lower the fees that way. So I think that's what I'm talking about with being a PowerPoint or a point of leverage in the ecosystem. But really where Block is making most of its monies today is with subscriptions. This is a look at the subscription-based revenue in orange and subscription-based gross profit in purple. Just a tremendous gross profit from the subscription business. And this is where Block is getting a lot of operating leverage on the tools that it builds for businesses. So whether this is scheduling or calendars or all of the other tools that Block is providing to businesses to help those businesses run, this is a very high margin business because it's basically a cloud-based software as a service business. So you get those phenomenal economics behind the business. And this is, I think, ultimately the biggest thing is that's going to drive Block's revenue growth and profit long term. From a valuation perspective, Block is actually pretty cheap as well. If you look at a next 12-month basis, shares are trading for just 17 times expected earnings. That is a great value given how sticky the business is to the customers that are using it, the growth in the Cash App and the number of people who have been using the Cash App long term, and the momentum that they have there. And like I said, the optionality for them to disrupt the payments business long term by helping change the rails and how we're moving money around. So I think Block is the kind of company that can continue to be disruptive because it has such a valuable place for both consumers and for businesses in fintech. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The next company is Robinhood, which I think is one of the best brokerage companies today, has a very easy to use platform, and it's used a number of tools to actually attract billions of dollars per quarter in assets under management. So it's giving bonuses for people to move their brokerage accounts to Robinhood, about 1%. They're matching Roth IRA contributions at a level of about 3%, and even giving a 1% bonus for deposits onto the Robinhood platform. How can they do that? Well, one of the ways that they're doing it is they're offering a subscription, the gold subscription, $5 to $7 a month, and you're able to pay for, and you're able to get all of these benefits. So that's providing a constant revenue stream. And then there's all kinds of other ways that they can make money once people have assets on the platform. Margin loans, payment for order flow, credit card loans. There's all kinds of ways that Robinhood can make money. You can see from this chart that revenue growth has just been tremendous over the past couple of years, and the company is now profitable. That should continue as they're adding more and more assets to the platform. This is what's been so impressive in 2024 is the rapid rate of assets being added to the platform. This is partially because asset values are going up, but there are also inflows of assets to the platform because of all the benefits that they have. As a digital first brokerage, I think Robinhood just has infrastructure and products that a lot of its competitors like Schwab, like Interactive Brokers just can't compete with. They just don't do what Robinhood does quite as well as this company. And I think this momentum is going to continue. As the company grows, it continues to be able to offer more services to customers, adding more and more value. And the amount of assets that each of those customers has continues to go up. So basically they're serving a wealthier client base, which is going to be a great value and provide even more leverage for Robinhood long-term. So love the position that they're in with a brokerage first business, and then that allows them to expand into all kinds of other products. The third stock is one that I have covered on this channel a number of times. That is SoFi. Very similar experience to Robinhood. So a digital first company, but more focused on being a bank first rather than a brokerage first. They do have brokerage solutions, so you can buy and sell equities on the SoFi platform, but they really started as a lending platform and a checking and savings platform. That's really where the business started. That's what drives the business. That's what a lot of their technology revenue is going to come from. So let's just look at a few of the drivers of the business from a fundamental basis. You can see that lending has kind of leveled off the last year or so for SoFi as the management is taking less risk from the lending side on personal loans and then also student loans. But we've also seen tremendous growth in the technology business and the financial services business. These are two areas that can basically grow unbound by the amount of capital that SoFi has. And so that's why I love this business and its growth, because I think these two segments are going to not only continue to grow, but continue to grow extremely profitably long term. So the market has kind of beaten up SoFi stock. We're trading at about a 52-week low right now. But this is, again, a really well-positioned company if you're looking for a company in the banking business. Doesn't have all that cost associated with all the buildings that traditional financial institutions have, all the staff that goes into that. This is, again, a digital-first company adding assets in the form of deposits, which can then be loaned out to customers, whether that's through personal loans, student loans, credit card loans, all kinds of different ways that SoFi can make money. And each of these segments is now becoming solidly profitable. I think that will continue. I did a video recently highlighting that CEO Anthony Noto recently bought shares. Executives only buy shares when they're bullish on a company. So I think SoFi is another company with a lot of long-term momentum behind it. So when you think about the future of fintech, I think Block, Robinhood, and SoFi are really well positioned because they have that consumer or business interface. They are the company that companies are actually interfacing with. They're not an intermediary in the middle. That will give them a much more powerful position as fintech plays out and more of our lives lives on a digital financial technology. So what do you think about those three stocks? Which one is your favorite? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.